Let's take a look at the oil market. Crude taking higher, on track to snap a 3-day losing streak. This comes after U.S. crude inventories fell for the 4th week in a row. That's according to data from the American Petroleum Institute. So here to discuss commodity moves, we've got Neal Dingmann, Truist Securities Managing Director of Energy Research. And thanks so much for being here with us this morning. I want to talk about a very interesting part of your note that you sent over here, specifically about the potential impact of the election, Neal. Talk to me about what your call is for the price of oil and where you see that going if we have either a Democrat or a Republican entering the White House come November.
Sure. Nice to be here. I think at least for the remainder of this year, we see prices remaining around this level, the $80 level. I think what's caused, by the way, the last sell-off is just a little bit abatement of the geopolitical risk. But when you look up in the election, and especially when, again, if let's assume number one, former President Trump would take office in January, if he would win and take office in January, I think you would have immediately much less energy restrictions. I could go on all sorts of types of restrictions, from pipelines to drilling to federal acreage, et cetera. And I think just not only just the fundamentals of that happening, but the sentiment perception of that going on, I think could cause, obviously, the thought of production going, notably or materially higher, and as a result could cause prices to fall off at least 10%, if not closer to 20%. So I think there's a chance that prices, if former President Trump wins, the prices could go down as low as $70, high 60s, and the reverse. If Kamala Harris is elected and the Democrats stay in office and a lot of energy restrictions are maintained, I think you have an angst that production will potentially even fall from current levels as sustainable fuels are focused. And as a result, I think that could cause prices to go up even over $90 a barrel. So I think there's a big range, somewhere, maybe a $20 or $25 range potentially is that high, depending on who the outcome of the election.
Neal, could it be even higher? I guess I'm curious how, from your conversations, and maybe it's too early at this point, but how industry insiders are thinking about a potential Kamala Harris presidency, just given her record, her track record on energy, some of the rhetoric that she has used. And I think there is a question out there as to whether or not we will see even a ramp up in some of those regulations if she were to win the presidency, even versus what we see under the Biden administration today.
Oh, no doubt. I think there's a question that she could double up on the IRA. There's just a lot of steps that can be taken very quickly. And, again, especially when you look in the U.S. with natural gas, the one thing that's desperately needed with natural gas is, again, pipelines, and I would call it a bit less restrictions so that these pipelines can be added, can be converted. And if we see this go the other way, you're exactly right. I think prices, 90 is probably even low. I think there's a potential, as you pointed out, for even higher if the restrictions even, are jumped. So I think there is a big chance that you could see prices much different. Maybe not natural gas prices as much, because, again, I think the continued LNG AI demand is going to probably continue to push that a bit more. But certainly oil prices can have a huge variable.
Talk to me about that AI demand, Neal. We're seeing some of the big tech names like Alphabet dinged this morning because of their AI capex. In a couple of years, if they change their tune and decide that they should not be devoting so much money to AI, how much risk does that hold for the energy sector?
Not a ton yet. The build out has been pretty minimum. Kinder Morgan mentioned it on their call last week. I expect Williams companies to announce it on their call. Very few of the EQT, their call starts here in, I think, about 30 minutes. I'm sure they're going to talk about that a lot. But there's been a lot of talk about it, but there hasn't been any specific build out. And I think there's a bit of a wait and see by my energy companies to decide where the data centers are going to go, what the demand might be once they're going to be built, all those sort of things. So I don't see too much downside yet. But again, I think the upside is going to be just the magnitude and sort of locations of those data centers.
All right, Neal Dingmann, always great to get your insight here. Truist Securities Managing Director of Energy Research. Thanks so much.